Hello and welcome to our webcast. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, Common Audit Findings for Tribal Governments. Before we begin, I'm going to play a brief video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and now I would like to introduce today's presenters from Moss Adams, Libbe, Senior Manager, and Linda Costa, Manager. Their bios and contact information are located in your webcast console for your convenience. And now I would like to turn the floor over to Linda to get the presentation started. Linda?
Thank you, Amy. Hello, everyone. Thank you for joining me today for the Common Audit Findings for Tribal Governments webcast. I'm so excited to be presenting this to you. Here we have our agenda for the day. First, we're going to look at the big picture, the benefits of being finding free, and what that might mean for you and your organization. Then we're going to jump into the different types of audit findings. Following that, we'll dive into the breakdown of internal controls and compliance exceptions related to the requirements behind those audit findings. And then we'll jump into the common audit findings. And with each common audit finding that we bring up today, we'll also discuss different recommendations to consider to help you stay ahead of the curve and away from those common audit findings. Now, there are many benefits of finding free audit. The main benefits all play into what it means to be a low-risk auditee. So if you don't have any of the more severe audit findings, then you can be considered, for the past 2 years, then you can be considered a low-risk auditee. Some benefits include a higher likelihood of getting competitive grants. Now, I like to liken this to having a higher GPA equals getting more scholarships, things like that. Another benefit would be no repayments from those nasty question costs. Limited oversight from federal agencies and auditors. Fewer requests during agency reviews and agency audits. My personal favorite benefit, fewer requests from external auditors, which would mean on your schedule of federal expenditures on your CFA, the audit requirement for a low-risk auditee would be to only test 20% of those expenditures. If you're a high-risk auditee, then the auditor would have to test 40% of federal expenditures. This could be the difference of one or two major programs in your single audit process, which could mean the difference of a lot of extra time for yourself and your team. Also, it's important to note that once you have an audit finding that is severe enough to qualify a program, then that program, if it were to be tested in the following year, if say you were to have 25 eligibility selections, well, the next year we would have to account for that higher risk, and therefore your auditor might request 40 or more selections. Another benefit, which is important, is timely audit results to tribal council and boards. And the most important benefit of a finding-free audit means that if you're lacking findings, you're using your funding most efficiently. Looks like we have our first polling question. I'll pass it to you, Amy.
All right, thank you. So our first polling question is, has your tribe or organization ever had audit findings? A, yes, B, no, or C, I'm here to learn what that means. And we will give you a few moments to respond. And to respond, you will need to click the button next to the answer you choose and hit submit. And if you can't see the submit button, you will just need to enlarge the slide area. Give it another 5 seconds here. Okay, here are the results.
All right, interesting results here. So we have 24% of the people answered have not had any audit findings. And I really like how there's a bunch of people here who are interested in learning more about what an audit finding means. Let's dive into the different types of audit findings. An audit finding is an exception from the optimal review procedure, which results in one of the following or more from your communication notes from your auditor or documentation in your audit report. It could be a written explanation of errors, a note of a non-compliance with federal requirements, use of funds for improper purposes, weaknesses, deficiencies, or adverse conditions of internal controls, or simply just a need for improvement or change. Now, throughout this presentation, we're going to mostly be focusing on uniform guidance findings. However, there are also government auditing standards related findings. Now, government auditing standards does not require that auditors test controls and compliance. Findings might involve deficiencies in internal control, non-compliance with provisions of laws, regulations, contracts, and grant agreements, or instances of fraud. Now, government auditing standards states that if throughout the auditing process, the auditor comes across an instance of waste or abuse, they must report on it. Now, you might be wondering, what is the definition of waste or abuse? Waste is the act of using or expending resources carelessly, extravagantly, or to no purpose. It can include activities that do not include abuse and does not necessarily involve a violation of law. An example of waste is, say there were travel choices that were contrary to existing policies. Or another example of waste would be a procurement vendor selections that are contrary to existing policies. Abuse, on the other hand, is behavior that is deficient or improper when compared with behavior that a prudent person would consider reasonable and necessary business practice given the facts and circumstances. but this excludes fraud and noncompliance with provision of laws, regulations, contracts, and grant agreements. Abuse also includes misuse of authority or positions with personal financial interests or those of an immediate or close family members or business associate interest. An example of abuse would be an instance where someone might be creating unnecessary overtime for personal financial gain, or if an official was misusing their position for personal gain. So if the auditor comes across instances of waste or abuse, that is an example of where they would have to report on that finding. Now today we're going to discuss mostly uniform guidance type findings. Uniform guidance states that an audit must be conducted in accordance with generally accepted auditing standards, or as your auditor might like to shorten and say, GAGIS. Now, I'm going to go through the three elements of GAGIS. So the financial statements element is first. The auditor must determine whether the financial statements of the auditee are presented fairly in all material respects in accordance with generally accepted accounting principles. The auditor must also determine whether the schedule of expenditures of federal awards, or SEFA, is stated fairly in material respects in relation to the auditee's financial statements as a whole. So in addition to the financial statement element, there's also the internal controls and compliance element. In addition to the requirements of GAGIS, the auditor must perform procedures to obtain an understanding of internal control over federal programs sufficient to plan the audit to support a low assessed level of control risk of noncompliance for major programs. And then there's compliance. In addition to the requirements of GAGIS, the auditor must determine whether the auditee has complied with federal statutes, regulations, and the terms and conditions of federal awards that may have a direct and material effect on each of its major programs. Now, all of this is driven by the compliance supplement. And I'll highlight it now and I'll highlight it again. The compliance supplement is such a great tool. It is pretty much the roadmap that your auditor will use to test the different major programs that might come up as a result of your single audit. So when you receive a new grant and you find that assistance listing number on that grant, pop open the compliance supplement and get a head start on what might be coming your way if that major program would be audited. And it's also a great roadmap to make sure that you're efficiently using your funds and following the different compliance requirements that might be applicable there. Now I'm going to dive into the three different types of audit findings related to internal controls. I'll start with the least severe audit finding type. That is a control deficiency. A control deficiency is usually communicated verbally, or it could be written in the auditor's communication to those charged with governance. You can have a control deficiency, but you could still have an unmodified opinion, which is a clean report. Middle of the line type of audit finding related to internal controls is a significant deficiency. Now, a significant deficiency is going to be written in your audit report. However, it does not affect your low-risk auditee status. So think back to that first slide where we were talking about the benefits of being finding-free and all the different ways that being finding-free would equal a low-risk auditee and would equal a benefit for your organization. Well, a significant deficiency doesn't affect that status. And you can also potentially still have an unmodified opinion, a clean report. But a material weakness is the most severe type of audit finding. It is written in the audit report, and it does negatively affect your low-risk auditee status. It doesn't just affect your low-risk auditee status for 1 year, but 2 years. So if you have a material weakness in the year 2020, then that will affect your 2021 audit and your 2022 audit as well. It could also mean the potential for a qualified or adverse opinion, which would mean not a clean audit report. Now we'll discuss the three elements of audit findings related to compliance. Our least severe type of audit finding related to compliance is what's called an other matter. Now, an other matter, similar to a control deficiency, is communicated verbally, or it could also be written in the auditor's communication to those charged with governance. You can potentially still have an unmodified program, so an unmodified major program as it relates to your single audit, that clean report. The middle of the line type of audit finding related to compliance would be an instance of non-compliance. Now, this is going to be making its way into that audit report as a written down finding. However, it would not on its own affect your low-risk auditee status. Additionally, you can potentially still have an unmodified program with an instance of non-compliance. And then there's the material non-compliance. Now, this is the most severe type of audit finding as it relates to compliance. And this would be finding its way written into the audit report. It would also negatively affect your low-risk auditee status, similar to material weakness. Now, this would be also affecting your clean audit report. So typically when there's material non-compliance, you're going to have either a qualified or a first major program and not a clean audit report. Here we have listed all the different elements that go into a finding. Specifically, when you see a finding written in your audit report, you're going to have each of these different types of subheaders within that finding. And we'll start with the criteria. The criteria or specific requirement is essentially, in a perfect world, what would be occurring. It would be what we would expect to occur if there were no findings or exceptions in internal controls or compliance. Now, the condition is what's actually occurring which led to the finding. So it's the exception to the rule. It's also usually reported in conjunction with the context. So you'll have condition and context showing this is what's occurring, this is why we have this finding in this audit report. In this section too, any sort of question costs, if they were to arise, would be there as well. Following that, you'll see the effect. Now, the effect part of the finding is the focus of the risk which exists because of that finding which was found. Following the effect, in the finding that's documented, you'll see a cause. Now, a cause are the conditions which occurred which led to the exception of the rule. An example of a cause could be something as simple as staff turnover, or reconciliations were performed a year after fiscal year end. Now, my favorite element of a finding is the recommendation portion. Now, this is in the audit report, and it will generally be a recommendation from the auditor, a roadmap as to how to rectify the conditions which exist that led to the finding. And then the final element of the finding would be the management's response. This is where management agrees and outlines a plan of corrective action to rectify the situation. And we have another polling question. So I will pass it to Amy.
All right, thank you. The second polling question is, which of the following is not an element of a finding? A, effect, B, recommendation, or C, other matter? And while you're responding, a couple of you have reached out saying you can't download the slides from your console. So you can try hitting the F5 key to refresh your screen to see if that works for you. Otherwise, just know that you will receive them via email tomorrow, along with a recording of this webcast. And it looks like most have responded. We'll leave it up a few more seconds. Okay, here you go.
Thank you, Amy. Well, it looks like most of us have gotten the answer to this correct. It's C, other matter. So as we just went over the elements of the finding, so I'll just briefly go over them again. That's criteria, conditions, context, question cost, effects, cause, recommendation, and management's response. So other matter is not considered an element of a finding. Now I'm going to go over the different requirements behind findings. Now we've talked a bunch about compliance and we've talked a bunch about internal controls. Internal controls are generally defined as a process effected by an entity's oversight body, management, and other personnel that provides reasonable assurance that the objectives of an entity will be achieved. Compliance requirement is the requirement as specified by the OMC compliance supplement or grant document. Now, it's important to note that these aren't mutually exclusive, that often a breakdown in internal controls would lead to an instance of non-compliance. So these are the elements that make up the structure which, if these are being followed and adequately in place, you could be finding free. Let's break down a hot topic of controls versus processes. Now, controls are an action meant to catch a big mistake or non-compliance. But processes are an action meant to record or do something. It's easy to have processes in place, but having the controls in place which check and review those processes are occurring without mistakes or non-compliance is key. Here we have a couple examples. For example, it's easy to post a journal entry, but reviewing the journal entry with the sign-off is the control that checks that process is occurring. Another example of a process would be providing budget to actual reports, but the control which approves that report would be tribal council resolution. Another example of a process would be entering effort allocation into a payroll module. For example, if you had an individual whose time is 50% allocated to state TANF and 50% allocated to federal TANF, then that would be in, we'll say, your Paycom module. But that entering into the payroll module is not the control, it's the process, it's the action. The control would be the approval of the allocation or the approval of the pay rate on that personnel document. So that signature of approval is really the control that approves that process. Another example of a process would be a physical inventory count of capital assets. But the control behind that process would be the evidence of review of the physical count by the manager. So it's important to note here too that yes, you can have controls in place, but having them be observable is another important aspect to this. So that breaks down the internal control finding factors. For compliance requirement finding factors, we have this list of different compliance requirements here. I'm going to go back to that compliance supplement plug, and if you were to say you have a brand new grant and there's the assistant listing number is listed on that grant, you pop open the compliance supplement and you control F and you look for that assistance listing number and you get to that section, you're going to see these exact compliance requirements listed out there. And it's going to say yes or no. So the compliance supplement will outline which of these compliance requirements in front of you are applicable to that ALN number. The compliance requirements, which could be applicable, range from period of availability, eligibility, cash management, allowable costs and activities, equipment management, subrecipient monitoring, reporting, procurement, and special tests and provisions. Now, it's important to note that if you have a uniform guidance compliance finding, that it would be directly applicable to one of these requirements here. And we have our third polling question, so I'm going to go ahead and pass that to Amy.
All right, so the third question, do you think your system of internal controls clearly distinguishes between what is a control and what is a process? A, yes, B, no, C, I'm not sure, I'll have to review what we have documented. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. All right, here are the results.
All right, it looks like most of you out there do have a system of internal controls that clearly distinguishes between what is a control and what is a process. So that is great. And those of you that entered no, well, I really hope that, these slides have helped you determine the ways of improving upon that.
Hey, Linda, this is Libbe. I'm just going to jump in real quick and talk about something that we had on one of our slides back about the government audit. We had a bullet point that says that the government auditing standards don't require auditors to test controls and compliance. We, as auditors, we do issue a report on internal controls based on our audit performed with GAS. However, within that report, we're not opining on the effectiveness of the internal controls, and the auditor will most likely test your internal controls, and they will test your internal controls and compliance and report on their test of those controls, but we're not required to opine on the effectiveness of those internal controls. So I just wanted to add that kind of clarification. Back to you, Linda.
Thank you, Libbe. All right, and now we'll jump into the common findings and protocols to prevent them as it relates to travel government. Here we have a listing.
Hey, Linda, I think maybe you might be on mute.
Can you hear me? Hello?
Yes, we can hear you.
Okay, great. Thank you. All right, so now we'll jump into the different types of common findings and protocols to prevent them. All right. So here we have the different compliance requirements.
1 second,
and
everyone. We might be having some technical difficulties.
All right, here we have the different bolded sections of compliance requirements, of which we're going to discuss some examples of common audit findings here today. As it relates to financial statements, a common audit finding is the lack of reconciliation procedures which are properly in place. A more specific finding example, which we've seen multiple times, is internal control findings related to the CFA presentation. Some recommendations as to how to avoid this finding are as follows. So it's important to do a thorough review of the CFA schedule of expenditures of federal awards prior to bringing in the auditor. A question that you can ask yourself as to whether this is occurring is, have you properly captured all of your grants? Another question you can ask yourself is, have you properly captured the total federal awards expended for each grant? Are there controls in place related to the preparation of the CFA? Thinking back to that controls versus process, yes, we have the CFA prepared, but is somebody reviewing that preparation of the CFA? And then I'd like to add a specific COVID-19 requirement. So if the award relates to a COVID-19 related federal award, the awardee must report those expenditures on a separate line on the CFA with COVID-19 as a prefix. For example, if you have your tribal self-governance program, you'd want to report that on one line or multiple, and then also, depending on how you report on your CFA by grant, then you'd also want to make sure that if you were given funding specifically related to COVID-19, whether that be through different COVID-19 related programs, that those expenditures are reported separately on the CFA with that COVID-19 designation in front of it. The next item, which is a common audit finding for tribal governments, is the design of internal controls over segregation of duties. So an example that's pretty common within this sphere of type of findings is within the accounting system, there are one or more individuals with super user rights. Now, super users are individuals in the accounting system, payroll system, what have you, which does not have any restrictions on what they can perform in the accounting system. It also could be applicable to payroll. Now, these individuals can also, in this finding example, there's an example of where this individual who has super user rights also can initiate wire transfers. Some recommendations to how to avoid this specific type of findings are these mitigating controls we've listed here for you. The first mitigating control is the timely bank reconciliations performed monthly by an individual that did not prepare them. The next control would be wire transfers requiring approval of multiple individuals and different types of approval. For example, email approval, phone call, council memo. Another item, which would be a great mitigating control, is regularly reviewing user access listings to ensure that no one individual can initiate, approve, and execute a transaction without the involvement of another individual. If you're wondering, how do I download the user access listing out of my program? Well, generally, whichever program you might be using, if you were to just contact, like your help contact, they should be able to point you into how to download a user access listing. Another mitigating control would be that all account reconciliations are reviewed by an individual other than the initiator or individual with super users or admin rights. A final mitigating control to note is the monthly review of budget to actual reports. All right, so those of our common audit findings here today, those are the two that are related, that we have for you, that we see that come up commonly as it relates to the financial statements as a whole. To dive more into common audit findings of which relate to compliance requirements, I'm going to pass it over to my colleague, Libbe to take it away.
Awesome. Thanks, Linda. Okay, so for our next, for our next common audit finding, we're going to move more into the uniform guidance compliance requirements and discuss findings that we typically see related to allowable costs and allowable activities. So in this example, the auditors determined that allowable costs and allowable activities are direct and material to this grant. And within that, they've also determined that payroll expenses are material to the grant being tested as part of the single audit. So they make a sample selection of employees who charge time to the grant, and they select those employees, and then they request from the tribe personnel action forms showing that each of those employees was paid an authorized rate at the time that the charge was made to the grant. However, the tribe is not able to provide either hard copy or electronic documentation of an authorized pay rate at that time. We see various iterations of this where, like I've worked with a tribe before where they had a small department and some of those employees had been there for a long time, and they just never established a procedure or policy for how to document pay rate authorizations. So each year, management would discuss what those pay rates were going to be, and those employees would get paid that amount, but it was never documented or formalized. Or it may be that when an employee first starts working, they, sign their contract and it says, here's what our pay rate's going to be, and then year after year, those employees might get raises, or there might be cost of living adjustments or something like that, but those aren't getting documented anywhere. And there's various ways that you can avoid this finding. So in this instance, this is a control finding. There aren't adequate controls in place for the auditor to test that you're complying with these allowable costs and allowable activity requirements. Does it mean that there's a compliance exception? I'm not sure. So it would depend on the facts and circumstances of this specific event. But at any rate, this would be a control exception. So ways that you can avoid this finding would be to develop and update your personnel policy for pay rate and authorization. So in auditing, we have this expression where we say, if it's not documented, it didn't happen. So even if the pay rate has been authorized, unless there's some sort of audit evidence or documentation showing that that pay rate was authorized, then your auditor or an external party doesn't have any way to test that you had controls in place to ensure that. So a first key step is developing really robust personnel policies and procedures. And within those policies and procedures, you should ensure that there's segregation of duties between who can approve those pay rates and who can make those changes in the system. There should also be controls for monitoring those pay rates to ensure that the rates that were approved are what actually gets entered into the system. A couple of things to be aware of are changes to pay rate authorizations and how those will be documented. So is it going to be hard copy? Are people going to come in and sign saying, yes, I approve this? Or is it going to be more of an electronic authorization? And if they are electronic, note that those should be recorded historically. So the auditor should be able to see that the pay rate that was being paid was authorized at that time. If two people are discussing and they say, yes, let's give everyone a 3% raise, and they go through and they do it, and then later the auditor requests documentation of that 3% raise, and they say, well, I remember we talked about it, so let me just send you an email now saying, that's what we approved. The auditor can't see that those were approved at the time that those employees were paid. So if you are going to do it electronically, just make sure that you're creating a system where you can document that approval at the time that it's done. So yeah, the big lesson here is document or it didn't happen, and ensure that your policies and procedures are updated to reflect what's currently happening and contemplate changes in technology. Now in this example, we're talking about payroll, but this could extend to other types of payments as well. So disbursements that are for products or services. Policies and procedures should clearly document how you're going to show approval of those payments at the time of payment and show that they've been reviewed by someone with knowledge of the grant. Okay, our next compliance requirement that we're going to talk through is the eligibility requirement. So in this example, we're working with a clinic and they receive IHS funds. And there's requirements that the people who are seen at the clinic have, different eligibility factors. So are they members of the tribe? Do they live within a certain geographic area, et cetera? And the clinics established certain things that should be in each file to show that those participants are eligible to receive services. And the auditors select a sample and they request support to show that someone has verified that those people were eligible prior to receiving services. However, there's no observable review in the file for eligibility. So we can see that there's some documents in the file, but we can't see anywhere that someone with knowledge of the grant and those requirements has gone through and made sure that that individual is eligible prior to being served. So again, this is an instance where there's a lack of controls. And as your auditor, it would be difficult for us to see if you are in compliance with that grant as well. Now, sometimes you can, if there are no controls and we have an exception, you can go through and get that additional documentation and show that that person was eligible, so it may not be a compliance requirement. But if you don't have the control there in the first place, then it would be a control finding. So we do have a few recommendations to avoid this finding. Within your program, whether it's HUD or IHS or a TANF, ensure that you're designating one or two individuals of whom it's their responsibility to review the documentation for eligibility. And kind of moving down to the third bullet where it says, develop a checklist or an observable review. Again, this is going back to that document or it didn't happen concept. I see this a lot at health clinics where you're serving your community, and the people that work at the health clinics often know the people that come in there, day in and day out, or annually, or quarterly. And in their mind, they say, of course, I know these people. I know that they're eligible. However, that's not a testable control for your auditor or for an external party. And so it's hard for them to say, yeah, you do have controls in place, because we can't test that person's knowledge of the community. So developing a checklist or some sort of internal signature system to show that eligibility has been documented prior to providing those services will ensure that your auditor can test your controls. And again, it's important to develop robust policies and procedures to ensure that eligibility is being determined in accordance with the grant requirements, and if required, it's being updated in accordance with the grant requirements. Okay, so our next topic is equipment and property management. Now, there is a requirement in uniform guidance that a fixed asset inventory is performed every 2 years, and it should be reconciled to the general ledger. Now, this is a uniform guidance requirement, so it primarily pertains to capital assets purchased with grant funding. And prior to COVID, this wasn't as big of a deal in terms of being a common audit finding. However, with people working remotely and on-site visits being limited, we've seen this become more of an issue where the inventory is not actually being performed every 2 years. And it's becoming more common. So a few recommendations to avoid this finding. The main one is just make sure that that physical inventory is being done at least every 2 years. I've seen instances where people kind of spread the burden of doing it around. Depending on your tribe or your organization, this might be a bigger task or it might be a smaller task. So what you can do is you can delegate that responsibility out to the departments that do have capital assets and basically say, okay, we're going to start with you guys as the responsible party, go through and do an inventory of your assets and provide us, the results of that inventory. And then someone from accounting or the finance department can go out and sort of verify those records. So that way it's not all being placed on one person to do. You could also designate a centralized department or individuals to perform the inventory observation. And I was recently at a roundtable that we had with some tribal casino CFOs, and they were talking about various different services that you can get to help you with these types of fixed asset inventories. So it might be beneficial to reach out to companies that do that type of service, or perhaps reach out to, I know some accounting firms are willing to help with inventory audits. Just depends kind of on the scope of what you need and what you see as resource restrictions for your tribal organization. So this is the same finding, but within your inventory records, in order to complete that annual 2-year or the biannual inventory requirement, it's important that you have robust policies and procedures around fixed assets, which should include having really descriptive inventory records. So if you purchase inventory with, if you purchase capital assets with your grant funding, make sure that you've got in your records a description of that property, the serial number or other type of identification number, the source of funding, who holds the title, the acquisition date, and the cost, and what percentage of that was purchased with federal funding. So having complete records in the first place will help make that inventory process easier down the line to ensure that you're complying with that 2-year inventory requirement. And another thing to note here is that the inventory should be done, like those assets should be observed, and then there should be a reconciliation process in your general ledger. So you have to go in and adjust and make sure that what the results of the inventory were are reflected in your accounting records. Okay, and now on to everyone's favorite, procurement, or at least it's my favorite. Okay, in this instance, we have a tribe and they have made a large purchase. It's over the simplified acquisition threshold, which is now $250,000. And they have a policy and procedure surrounding their procurement process wherein they are allowed to use sole source purchasing if they fill out their sole source justification memo and it's properly approved. And so they go through that process, they fill out the sole source justification memo, and they say, okay, we're good, we did that. However, that purchase didn't qualify for sole source purchasing. Now, I'm going to skip ahead a couple slides, or one slide here. If your purchase is over the simplified acquisition threshold, there are some instances where you can use sole sourcing. You know, if that item is only available from a single source, if there is a public emergency and the requirement doesn't permit a delay in purchasing it, the Federal Awarding Agency expressly authorizes non-competitive proposals, or after solicitation from a number of sources, competition is determined inadequate. Now in this example, let's say the tribe's doing a big project and they have an engineer that's helping with that project, and they have to purchase a large piece of equipment. And the engineer says, hey, we found this piece of equipment, we recommend that you buy it with this, you buy this one. And so the tribe fills out the sole source justification and says, purchasing this because the engineer recommends this product. And they don't go through any of the bid process or getting quotes or putting the project out for bid to see what the cost would be if they went with a different vendor. Now, even though they filled out that sole source justification memo, it didn't qualify for sole source justification, and the reason that they used wasn't a reason that is allowed under sole source justification. So technically, this is non-compliance. So I'll go ahead, and we've got kind of this procurement clause, and it talks about, you know, the different levels of purchases. So now micro purchases and small purchases. The small purchase threshold is less than $250,000 now. So under $250,000, and depending on your tribe's policies and procedures, you can just get quotes, and you don't have to do like a formal request for proposal or you know, sealed bids or something like that. But you should still be following your policies and procedures for how many informal bids you get, the cost analysis, and determining, you know, that you're spending those funds effectively. Over the $250,000 requirement, you should be getting sealed bids or competitive proposals, depending on the type of service, or if there is a reason to use sole source purchasing, then documenting that effectively. So kind of going back to this slide here, we have a few recommendations to avoid this finding, and the biggest one here is training, making sure that people know what the procurement policies and procedures are and the requirements that they need to follow. Also, it's helpful if you can, if it makes sense for your organization, to establish a procurement department or official in a centralized monitoring area, so that way you're limiting your opportunity for error. If you have a centralized purchasing department, then they're well aware of those procurement requirements, and they're more likely to enforce those requirements versus having a decentralized process where each department manager has to be trained on the procurement requirements and what they need to follow. And then again, update policies and procedures to stay current with procurement thresholds. As I said, we saw a change from, the simplified acquisition threshold being 150,000 up to 250,000. So you want to make sure that you're updating your policies and procedures with what your tribe has determined is appropriate. Okay, so that is procurement. Our next reporting requirement, so in that instance where they had the control that sole source memo had to be filled out, that's not a lack in design of internal controls, so it wouldn't necessarily be a control exception. However, it's still an instance of non-compliance, which would be reported because they didn't use the correct reporting. They didn't use the correct procurement method. So that would be reported as a finding as non-compliance. So moving on to reporting requirements. In this example, the tribe is required to submit quarterly SF 425 reports, and those reports are prepared and signed by the same individual. So there's no documentation of the review or approval process. So the auditor can't see that anybody has reviewed that report before it was submitted. And segregation of duties is important, to one, ensure human error is caught. Did you transpose a number or type in the wrong expense? But then also verifying that the right numbers are being used in general. Are you understanding the requirements of what's supposed to be reported? Are you understanding which grant should be included in that report? So the review process helps ensure that two sets of eyes are looking at something before it's submitted and it's more accurate and complete. So a few recommendations to avoid this finding is to have policies and procedures that designate a specific employee to be the preparer of the reports and a separate reviewer of those reports. And ensure that that review is observable by the auditor or an external third party performing an audit. So can I see that someone reviewed this? Now, I've recently had an instance where someone was saying, where the client said, well, we go into the portal and we input our information, and once it's in there, I can't print this report so someone else can see it. And so it would almost have to be that, while I'm putting it in, someone has to sit there with me and see it. Now, maybe that would work for them, that would be the best way to do it, and then maybe afterwards they send an email and say, so-and-so entered this report, and we each reviewed it and submitted it. Another option could be one person prepares the information for that report and says, okay, here's the information, here's the expenses that need to go into it, here's, whatever other numbers need to go into that report, and then they send it to the person who's responsible for entering that report into the portal. And so that email documents their approval of those numbers. So then the other person takes that information and enters it into the portal. And so there's a segregation of who has prepared the information and who has entered it. Now, in that instance, there's not someone sitting there looking over their shoulder, making sure they type the correct numbers. However, there's still a segregation of who prepared the information and who entered it. And then again, just update your policies and procedures to reflect the current controls in place. And within the policies and procedures, it should indicate, who is doing what based on position. So it shouldn't just be names, because when there's turnover and you lose that information, that's where we tend to see a lot of control deficiencies come through. So if your policies and procedures say, Linda enters this information and from her computer, and Libbe observes it and approves it. Now let's say Libbe and Linda both leave and new employees come and they have no idea where that information comes from or what's supposed to go into it. And then when they go to prepare that report, they may not understand, what's supposed to be in there or what the purpose of having the separate employees do those tasks was. Okay, looks like we have our final polling question, I believe. Amy?
Yes, so the last question is, what is your favorite compliance requirement? A, allowable costs and activities, B, reporting, C, procurement, D, eligibility. And once you have completed your all CPE requirements, you can download a PDF of your certificate from the CPE progress window in your console.
And obviously, this is just kind of a silly question. You don't have to have a favorite compliance requirement.
We'll leave it up another 5 seconds to make sure everyone gets their CPE. All right, here you go.
Okay, wow, that is a pretty even split. So kind of running out of time here. So recommendations for strengthening your internal controls. As we said throughout the presentation, like the two main things that I would recommend would be, one, making sure that you have strong policies and procedures that are reviewed and updated frequently and really reflect what is being done at your tribe or your organization. And within those policies and procedures, there should be requirements or guidance on how to document those controls, how to document that something was reviewed, how to document that you followed your procurement process. You know, it's not enough to just do it. There should be a documentation that it was done. And then also training teams on what's required for the federal grants that they're working under, federal or state or, or even other types of grants. Especially with COVID, we've seen a lot of turnover at tribal organizations, and a lot of people, who are working in programs being promoted to being program managers, and it may be a bit sudden, or they may not have the resources there to ask questions before they've been promoted. And so you may have people who are new to their job and positions that haven't been trained on how to follow certain compliance requirements. So I would say frequent training on what's required, and even if it feels like we just had this training last year, it may be something that you need to do more often than annually or more often than every couple of years, especially if you have a lot of changes in your personnel and a lot of people moving up or new people coming in. Also within your policies and procedures, making sure that there's clear distinguishment between what is the process, here's how we do it, and then what is the control, like here's how we will catch any errors or prevent fraud, or what are the controls and how do we document them. And then interacting with your auditor. If you're unsure on something, reach out. We are available to answer questions, or whoever your auditor is would rather talk about an issue that you may have encountered beforehand rather than finding it during the audit procedures. This next bullet point talks about audit scheduling and planning. If you can, try to schedule your audit, with enough time for the audit process to happen. So, if your report is due September 30th, don't schedule your audit to begin at the first week of September. That's not enough time to respond to audit inquiries. Okay, so running out of time. So I'm going to skip these slides and just say, we're here to help. Moss Adams offers a variety of services that can help you with your policies and procedures, whether it's through a review or a consultation on that. We also offer technical assistance. And I think I'm out of time, so I'm going to pass it to Amy to wrap up with the last few items.
All right, perfect. And thank you, Libbe and Linda, for a great presentation today. And I also want to thank our audience for being engaged and submitting your question to help guide today's conversation. If we didn't have time to answer yours, we will do our best to follow up with you after the webcast. Also, feel free to reach out to our presenters if you have additional questions. Their contact information is located in your console and in the slides. And if you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks should you have difficulty downloading it now. And as a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in your console. Finally, here is a link to an online survey for today's presentation. And thank you for joining our webcast. We hope you'll join us again next time. Take care.